Welcome to Scouting for Growth. Today, I'm meeting with Iain Wilcox, CEO of GWT Insight, a tech company focused on making cost-effective commercial building data available to their owners, operators, and advisors. Iain is an entrepreneur, leader, and visionary who successfully started new business operations from scratch, balancing strategic planning and practical implementation. Over a period of 30 years, Iain worked with companies including AT&T and Cognizant. And 5 years ago, Iain launched GWT Insight with his co-founders. During the course of our conversation, Iain and I discussed 4 topics. Who is GWT Insight from a company, brand, and team perspectives? Why both property and commercial building IoT are unique markets around which to build a risk mitigation ecosystem, benefits delivered to the property and insurance markets, including preventative maintenance to prevention, lesson learned from moving to the entrepreneurial space after years working for large companies. Let's discover the world of commercial building IoT and insurance. Hi, Iain.
Hello, Sabine. How are you?
I'm very well. Thank you very much for joining me on Scouting for Growth.
Very pleased to be here. Thank you for the invite.
You're welcome. And we always start the podcast with asking you who you are and what got you into our wonderful world of insurance, because you started in telecoms and tech services.
I did, very much so. And I think it's a world of operating in IT and software around financial services generally. I found myself gravitating to consulting roles around innovation in the insurance space, and in particular more around sort of risk management and risk engineering services that the insurers were delivering sort of 10, 15 years ago. And that's got me then very much into that world and very much enjoying it.
Superb. So you have been working with large companies, so you really understand established businesses. But then at some point, you made a shift. You became an entrepreneur. So tell us about Iain's journey from corporate to entrepreneurship.
I had been delivering consulting services for about the large 12, 13 years into the large corporates, and had witnessed just how difficult it was for them to marry the need to obviously provide, the structure and the control around sort of their investments and everything, and that was starting to, I think, hinder the course of being able to deliver on innovation. And I think there's a recognition around some of the partners that we were working with, who are working with large tier 1 carriers, that they needed to work with smaller startups. I at that time was working with a large Indian-based IT company, and I think they recognise the fact that actually both those organisations, when you were working together, can't do that effectively, and you need the agile and the flexibility and I think the speed to market of a startup to be able to do that. And so that led to the formation of GWT from GWT Insight, from that position of recognizing an opportunity and knowing that actually we could do it better as a startup rather than necessarily trying to do it within the large corporate entities.
So doing it better as a startup. Tell us a little bit more about GWT Insight. I would love to know about the name, the insight, and how you transform the world of commercial building. I would say IoT, but I would say our risk transfer world of insurance as well.
Well, I think there were so first of all, GWTI has been going for just over 4 years now, and I would love to say, having once the company was formed and we had the genesis of the idea, and we were very much starting to sort of look at product concepts and how we were going to technically deliver that, we said, right, we've got to get the name right. And we actually went to a brand consultant. And my chairman is a very He comes from a marketing background, so we said we've got to do this properly because it's about the brand presence, because you can create far more impact, not just in the technology and the services you're delivering, but by actually getting the branding and the positioning right. And we must have gone through 60 or 70 names, and unfortunately we couldn't come up with anything that wasn't already used by other people with URLs and things like that. So we ended up with the names of the founders as the initials, so John Giles, Peter Tuckett and Iain Wilcox, GWT, but with the insights very much providing the insights around specifically commercial property. And I think we've very much now focused on its GWTI or GWT Insights, and very much making sure that we've kept that positioning as a technology and now a data service provider into commercial lines and commercial property. I think one of the other drivers, though, that was quite interesting and why we felt that we needed to go down this route was that, albeit in commercial lines, property is one part of, and commercial property is one part of the risk exposure. We felt we needed to actually provide a level of focus and bringing together an ecosystem that could help deliver on the need to have proactive and better risk information on which commercial property underwriters and their risk management colleagues are working on. So there were a number of different drivers around that and helping to drive that innovation on a faster, quicker basis.
So on one side, you have the commercial property and commercial property owners. And then the other side, you have the insurer risk managers, which would actually potentially include, I think, the reinsurer, the insurers, the brokers. Can you tell us how the solution works, how the bits work? Because I assume you put stuff, right, on those big properties.
Very much so. And actually, I think it's understood now by a greater range of people. But originally, buildings, when they're built, they have a number of inbuilt sensors already there. So everybody talks about IoT, about, you're putting new sensors in. But we actually recognized there were certainly thousands, if not tens of thousands. Our first building had 26,000 sensors that were already being monitored by the building management system. And they're covering things like, set point temperatures, the actual temperature, return air temperatures, all the building, all the boilers in a large commercial building. And this is across, even your very standard office will have 5,000 to 10,000 data points. And so we recognized that there was an opportunity to go and pick up that data by listening to the existing in-house building management system, some of which have been around for sort of 20, 25 years, yet still have the ability to share that information if you've got the right technology to do that. And that's what we then set out to develop a device called the GWTI Observer, which listens to the building management system non-invasively, just listens to it in background, and then brings that real time into a dashboard where you can then create a better understanding of risk. And we'll talk in more detail about how it works, but basically a dashboard that's aligned to the risk profiles that insurers are looking to look at. You asked about commercial property owners, and actually I think when we were formed sort of back end of 2017, 2018, it was in the very early days of people understanding that they could save money around how they use and consume energy, and all of your energy, water, electricity, gas, all of the various elements. And I think now, obviously, with rising utility prices and the fact that we've seen doubling, if not tripling, of energy price and cost, that actually people are now also very focused around energy optimization. And we see ourselves being able to also not only deliver on the governance part of an ESG model with the risk management solutions that we're developing with our partners, the insurers and their brokers, but now also being able to also deliver on commercial property owners' desire to actually deliver a better understanding of how their buildings are performing and reducing their operating costs on a month-by-month, quarter-by-quarter, year-by-year basis.
So you have a little bit of a marketplace, right? Where on one side, you're actually enabling the risk manager, let's call them the risk managers, to improve their ability to underwrite, I assume price, but also how they manage claims, right? And provide efficiencies, but also find ways to serve the customer better. I wonder whether we can do that real time. But on the other side, You also have the risk manager, I assume, from the corporate viewpoint, where you can actually help them better manage their properties, reduce cost, but also manage risk. So we see a little bit of a preventative offer here coming to play. So how is the market responding? How are the corporation responding?
Good question. I think if you look at the insurers, first of all, the risk managers really, they want real-time data because, as you say, it's about loss prevention. And actually, in a number of instances, we in our pilots and now our rollout programs we're doing with our customers, we've identified loss events. Even in one insurer who had a problem with their air handling unit on their air conditioning system in a comms room, actually were able to spot there was a problem before it caused a leak. And they admitted if they hadn't have had that information, they would have had a loss event in a comms room in one of their offices, which was providing, business interruption. It would have been a business interruption claim because it would have brought down part of their IT and comms. So I think the risk management within certainly the insurer recognise there is an opportunity and they want that data and they can start to use on that. I think the underwriting community, we've still got a little bit of education to move through. They have still very much a traditional view. Not every insurer, I would hasten to add, but a lot of them are sort of saying, well, we need to see at least 12 months worth of data before we can judge whether we can actually improve the risk profile of a particular portfolio or individual building. And especially when you're looking at complex commercial lines and specialty, that can be more difficult. And also they don't have that building expertise. An underwriter may not understand at that sort of level. They're used to the COPE, the construction, occupancy, purpose and environment, but the more specific ones about actually real time, how is a building performing, and can we actually, because they're doing their fire alarm tests on a more regular basis, or they're doing them properly, or they're doing a lot of preventative maintenance around their in-house boilers and HVAC equipment, M&E equipment. I think that there's still a journey that we're on and a period of education. It will get there. Actually, nobody's saying, no, we won't accept this data. It's a case of we've got to change processes. We've got to change the basis on which people underwrite. And there are certainly some carriers and their broker partners, their channel partners who are starting to embrace that. With regards to the owners, I think it's the classic sort of third split. You've got the third that are leading edge and will go, yeah, we're going to embrace this. We risk manage all our properties and as part of an integrated risk management approach. So they see their property as one part in a supply chain or their service delivery, or if it's in retail in terms of delivering the customer experience. And I think they very much embrace it, and they will be and have been engaging and putting projects together and rolling out across their portfolios. You've got your third who sit in the middle going, this is really interesting. We're going to do something, but give us a year, give us 18 months. And then you've got your third who don't risk manage really that proactively. And so they will be last. And I think, there was initially, I'd say 2 or 3 years ago, before the pandemic, there was a reluctance of saying, oh, this is just going to be a ways and means of increasing premiums. But actually for both the insurers, the brokers, it's increasing margins. We've seen this. Actually, we can reduce the loss events. And even if a loss does occur, we've got earlier ethanol, so we're able to actually reduce the size of the claims. And we've spotted claims that have been $250,000 upwards that we've been able to spot the loss event before it happens. So this is significant. And the business interruption element for the owners, because they can continue to use their property as part of whatever the product or the service they're providing, actually that is significant. So I think it brings a different approach, a more collaborative and partnership orientated approach that both the insurers and their distribution partners and the owners ultimately can see the benefits to engage and do that. And I think it will change the way in which insurance is sold, because it as you know, when you've got the data, you can make better informed decisions about how you're managing your property, managing your risks, and how that impacts the rest of your business. Because I think property could account for 20 to 30% of the overall premium on a portfolio, when you've got business interruption and public liability and all those kind of things, and if employee liability as well. So you've got an area of the insurance paradigm and the value chain that actually impacts sort of quite a wide area.
Yeah, absolutely. I mean, when you look at the physical risk, you already mentioned that you can use existing sensors. So we mentioned 26,000 sensors already available, and then you can add new sensors when there are gaps. And that is pulling data, right? New data sets, which often we say in insurance, we are using old data set, historical data. So now we are starting using real-time, relevant data as we look at property and risk management approaches. Can you share with us, example or, organization you have worked with, but also, what type of benefits, they are getting when they start using GWT Insight?
Yeah, well, our foundation clients were AXA XL, and when we first started working with them, actually it was just before AXA acquired XL Catlin. So we started working with the digital innovation team, Helen Stanway and her team back then. AXA XL now are one of our well-established and confirmed carrier partners. We're also with Zurich Insurance Company, working with Mark Bird and his innovation team, off the back of actually, I think, the first Zurich World Championships that they ran, Innovation World Championships that they ran back in 2019, 2020. So very exciting for us. It was a big challenge for us to work with them. But actually, I think with both of those organizations, coming back to my earlier comment about working with a large corporate like those two, they actually embraced and were really flexible about and understood what it was like to be a startup trying to work with an organization as big as those two, and helped us. And we work with them to not only deliver a solution that from a data service perspective helps to differentiate what they're doing, because they started off with very much adding it as a service enablement, or a service enablement, an additional service they are offering as part of either the insurance premium bundled or as a standalone service that they would offer into their clients. And we've got use cases now across a whole variety of different examples and verticals. We're picking up data from real time from manufacturing units, yes, your standard offices, but hotels, schools, hospitals, central government departments. We're doing a lot of work with both the MOD, but also with local authorities. And certainly with Zurich, they've done very well in positioning it with local authorities. And some of the use cases and some of the benefits we're looking at, yes, there's picking up fire control data, so when the alarm, and if there is a problem with the alarm, actually it helps them to actually proactively go to their clients and say, have a look at this. This could actually be something that could cause a problem. Please, can you try and have a look at this on a real-time proactive basis, which I think is part of the kind of service that they want to offer to their clients. But we even in some of the pilots and subsequent rollouts that we've done with our insurance partners, we've seen loss events which we've been able to identify and stop from happening. We're big with AXA XL, and this is in the public domain. They had a client with industrial baker, and they had a problem with their M&E equipment where there was a leak developing, and we were able to actually see that happening with the sensor data we're picking up. I think one of the other things that we've been able to help identify is the gaps in the data. So where the data availability that you can then start to use, as you say, third-party sensors, things around indoor air quality, obviously post-pandemic, being able to pick up carbon dioxide levels, and you can't have pathogen detection as such. You bring together the operating environment of a building to understand if the air quality is not good, then it's going to have a higher propensity for spreading germs and bugs and pathogens that would potentially lead to, even COVID, but there's nothing that actually would ever detect COVID at this stage. But you can look at the environment where it's going to have a better chance if you haven't got the ventilation, for example, in place. But I think the last element is actually the benefits. I mentioned about ESG earlier. We've identified, I think, in every building that we've been into and every portfolio, there have been areas where we can help improve the operational efficiency of the building as well, and provide a better customer experience for the owner's own customers or their employees and stakeholders. So heating and cooling is a classic one where the heating comes on in the morning, especially in spring and autumn. You have a building that actually is cold up until about sort of 9 o'clock, 9:30. Sun comes up, and then suddenly the cooling needs to come on. Or you don't necessarily need to heat as long, and you don't need to cool as long, or buildings that actually have air conditioning running 24/7. Those kind of things, I think, are in every building we can improve and optimize the way in which the basic controls of the building are set up, and can reduce, I think, energy costs by anything between 15 to 30%. And in some instances, we've had a couple of examples where we've actually managed to reduce the energy cost consumption by 50%.
These are impressive numbers. So loss, identification or prevention in some ways is part of what GWT Insight is able to provide, as well as looking at ESG and identifying risk that, let's call it sustainability risk, right? Risk linked to ESG, and improving an organization or building owners, enabling building owners to actually do better around their ESG roadmaps. Pretty impressive. But now, to be able to do that, Iain, you already mentioned you're working with property owners, with insurers, and I assume you have a bigger ecosystem. It's funny because in November last year, I started, doing some work around digital ecosystem, and I was very fortunate to do some work with CBS News on that topic, and some of the videos are going to start popping up. But to be able to grow today, we need to build business ecosystems with partners. So tell us how you're building yours and how you're bringing others into the GWT Insight family to achieve your end outcome.
Oh, great. Again, great question. I think we couldn't do this. We sit, I think one of the things we identified right from the start was that as part of the risk management landscape, we are one part of it. Commercial property is one part of it. There are other types of risks within that. There are other types of infrastructure which we don't collect the data on, and there are a number of different factors. So a couple of examples we've got. We're working, the external weather factors are a huge part. So we're working with people like Previsico, Jonathan and Avi and the team there, who obviously the spin out from Loughborough University, and that's actually in partnership with the work we're doing with Zurich, where their real-time flood alert data coming in at a dashboard level. So we're collecting all the individual property data and how that spins up into a portfolio view. And they've obviously got their flood alerts. And if you've got the portfolio view, literally it's as simple as on a map where you've got the individual buildings all identified. And obviously they've got their overlay of where the flood alert, especially when obviously there's high rainfall in a particular area. And that can be then aligned with their obviously their flood alerting system. And then we can then provide the data around what's happening individually at the building and any impacts, where obviously there's humidity and moisture alerts in buildings and things like that, and third-party supplementary sensors to look at water levels in and around the building. So that's very much one good example of an ecosystem. I think the other areas is around things in the risk management portfolio. So you've got a couple of providers in that area, Intelligent AI and Risk Solved, who are providing the engineering reports and the wider wrapper of information, both historic and then proactive around, how was the building originally designed? What are the original design photographs? Obviously, there's designs and the diagrams, and we can overlay onto that, obviously, what's happening with the building. How was it originally designed to operate? and how is that now performing? Because that also can sort of say, was it designed in the right way? Should there be modifications to improve the way in which, and that ties very much into, yes, the ESG part, both from a, the environmental and sustainability piece, but also the governance of how the building should be managed. So those are a couple of examples. There will be other ones coming along. We're looking at indoor air quality, where supplementary fitting of very sophisticated air quality sensors that are detecting pathogens, even in food prep, with surface detection. There's people like Are They Air who are doing that work. There's a couple of North American organizations that we're starting to look at who are doing the pathogen detection around that. That's a very specialist area, and they will be providing, I think, real-time data on those kind of areas that will all come then into a centralized dashboard. Now, whether we provide that dashboard or whether actually we're providing an API of our real-time data into somebody else's dashboard, we're very flexible as to how we approach that. And we see also that there are some very good analytics tools, especially around the sort of the scenario kind of planning, especially around how buildings will operate in the future if they change certain the building setup or the way in which the business is operating and the processes within that. And so that may be also another area where we're feeding our real-time data into other people's third-party analytics packages. We are here to capture the data. And I think one part that's very interesting as well is making sure that data is standardized, so then when it is fed into other systems, you're comparing exactly the same. You may have different building management systems in a variety of different properties. A portfolio could be 50, 100, 500 buildings, and you need to be able to compare, even though it's coming from different systems, that data is for an air handling unit with the set point, with the room temperature, with the return air temperature, is all exactly the same, or the boiler is operating this particular way. The most complex area is metering, for example, and being able to pick up that sub-meter data and being align it to the overall building infrastructure. So I'd say the ecosystem for us is critical, and we are very much a cog within that wider commercial lines proposition.
Well, a lot of insight here, but I hear specialism, and it's lovely also to hear you working with Jonathan from Provisico and Anthony from Intelligent AI, because you have absolutely complementary capabilities, which then start building really interesting solutions. But as I'm hearing specialism, and you know that the world is going a little bit funny right now, right? Interest rate increasing, inflation, cost of capital going berserk, and finding talent is really hard. How's it been to actually lead a team and build culture at GWT Insight? How's your team?
Well, you're right. It's very, very hard in today's environment to grow a business. I think the pandemic, we were 4 or 5 people at the beginning of the pandemic. We're now 13 people and growing. We're going to add another 4 or 5 the rest of this year, rest of 2022. And I think from a cultural perspective, we're very much, because we're small and fast growing, everybody joins, even the most the youngest, most inexperienced members. I refuse to call anybody junior, because there's no juniors, because they are given responsibility right from the start. I'll give you an example. We've employed a young man called Tom, who as a developer on apprenticeship scheme in the UK. He's retrained. He was actually a policeman, would you believe? And what a swap in career. And he's hit the ground running. He's been with us 3 months, and he's already delivering value in terms of creating customized dashboard for our customers. He's doing a lot of work around our core product as well, which we're doing, very much in parallel around our core development and making sure we're staying on the leading edge of technology and how we're architecting and delivering our solutions, but also then working very much on customer projects to help deliver the customized dashboards they need. And he's hit the ground straight away. Our first employee, Tim, he's now very much leading the way and working with our CTO, John, around how we're utilizing and bringing in things like AI into the way in which we're delivering the data service. We want to create intelligent products for our clients, so they actually can then differentiate what they're doing. And so one way is putting them all on courses so they can improve what they do. So I think from a culture perspective, our team have to better themselves. They have to join with a view that they want to improve what they're doing, and they have value to add right from the start. We're on a very flat structure whereby they very much contribute to the overall product strategy and what we're doing, and that they can see and tangibly feel and measure the value they're delivering to our clients. And we very much have set that up as well, where they have skin in the game as an organization. So yes, we're young and I now describe us as we've moved from startup into scale up, but they all have direct input into the levers and the factors that will help us deliver on that growth. And we're very, very clear in our vision, so they understand where they fit within that, and what their contribution is to that, and what that means, while at the same time learning. We all make mistakes. It's also an environment where a mistake is good, because actually, as long as we learn from it, then actually we grow as an organization and as individuals. But it's a team approach around that, very much so.
Absolutely. I mean, I think teams are the ones which are able to change the world. But at the same time, Iain, I'm also thinking about, your years of expertise, I believe, over 30 years in industry. So what have been for you, the lesson learned from moving from established company to building a startup, moving into scale up? What are the top criteria you think are key from your expertise and from what you're building today to build a successful growth venture?
And I think experience, and as you say, 30 years in the industry, I think teach you that you're only as good as the people around you. So it's the team. We right from the start, we all said that John, Pete, and I as founders, we said, Pete is a building expert. We couldn't have delivered the understanding that we've now got of the rules and the checks of how risk impacts buildings, and being able to provide an understanding of how buildings are working in the solution that we're delivering to people who don't have that same level of understanding. So Pete's experience from a building engineering, building automation perspective, and helping to feed that into the solutions that then risk engineers and underwriters can use. And also John, from the background of his enterprise architecture background, his technical expertise. And so right in terms of from the founders through to actually everybody else in the team, I think it was the fact that you can't do it all on your own. And I know it's the classic thing that sort of entrepreneurs are the world's worst people for letting go and not having control. But actually, I've got a chairman who is, and it is very personal to us. We've all known each other. I think I've known everybody in the organisation for 15 to 20 years plus. We employ people that actually I've seen growing up. So it is a very personal story, but at the same time, we have people who have global international experience. My chairman ran a company that was sort of 5,000 people globally. And I think it's that balance between having a good understanding of what corporates need for us to engage with them professionally with the right processes, and delivering what we say we will on time and with a good quality product or good quality service. But recognizing that actually it's a team effort, and that also includes, you mentioned about the ecosystem. We recognize we can't do that from a solution perspective, and we're very focused on, we capture real-time data from buildings, commercial buildings. That is it. We're not going to try and do anything else. We're very focused on that, and that leaves room to then work with people who are like-minded. You mentioned Physico and Intelligent AI. They're very focused on what they're doing, and I think that really does set up a very strong ecosystem. And we're not exclusive. We can work with other people, and we will. But actually, I think that's what's attractive for our current partners, and we've got a number of very strong prospects in the distribution, reinsurance, and carrier space that I think recognize that we've got through the first sort of 12, 18 months of getting the concept to the ground, developing products that were being technically tested, and now we're rolling those solutions up as proven solutions on a global basis, in North America, Europe, and now into Asia as well.
That's super cool. One point you made, which I think I would like to reinforce, is that building ecosystem can actually drive differentiation and uniqueness. I was on a podcast recently with Simon Torrance, and we were talking about embedded finance, embedded insurance. But one of the key points he made was he started like you in telecoms. And one thing which fascinated him is that telecom providers are really good at building infrastructure. And they were providing that infrastructure to big tech. Now, think about Facebook, LinkedIn. Mm-hmm. And when at some point he made that realization that at the end of the day, by being an orchestrator and becoming, if you don't mind me saying, this puppeteer between the customer and different parties, you can actually build very unique ecosystems and make more profit and economic returns for your shareholders than anybody else. So there's why things to think about when we think about ecosystems.
Very much so. I would agree. And I think actually learning from my telecoms experience, actually, albeit was 20 plus years ago, is actually you don't have to go necessarily with the traditional CapEx model as well. You know, our whole business model is based around subscription. So you buy a data service, which then is integrated with a wider set of services, that ecosystem. And so it enables you to provide a return on investment far earlier in a project process than would otherwise be the case, with a proven technology that then can be incrementally rolled out across that portfolio. Doing regions at a time or doing propositions step by step means the one you can fail quickly if it is, or position the service quickly and easily to then test it in the market and say, yeah, that works, that doesn't work, we'll focus on this. So that whole, my telecoms experience, if that was one area, would be definitely the subscription model, definitely leveraging the strong capabilities of other players and being able to also use that to I think the service proposition, I think, also then helps differentiate insurers. Insurers are under pressure from lots of entrants from other markets. You talk about sort of Google, infrastructure providers such as Google or AWS or any of those sort of players. Even in the BMS industry, there's the building controls industry. There are people looking at different areas, and I think it enables the insurance companies to actually say, actually, we can also innovate and come up with different kinds of services that are not necessarily tied to insurance product. And I think that's one, they're more profitable. If you think the average premium markup, percentage markup for commercial property, even if it's a 5 to 10 million premium, the margins are still very, very tight. I know the margins that they can deliver out of services are up to 20 to 50% higher than they would on the actual insurance product. So I think it will see a change and a shift in terms of their the markets that they go for and how they position those propositions into their markets and with those clients.
Technology, data, digitization is enabling us to do a lot of things. And actually, Iain, I want to ask you my futuristic questions. So what are your top bets and where do you see us going as we move forward in our industry?
I can only comment from a commercial lines and property perspective. Obviously, in motor, you're seeing pay as you go and things like that. Do I see buildings going in the same way? Possibly. I do think I've had discussions with people saying, could you deliver a parametric solution around buildings? I think you could actually, because you can look at very predictable events. You can then look at automatic payouts of claims based on the replacement cost of key equipment around mechanical and electrical equipment. It is possible. I know in motor that's been around, or certainly in certain asset classes around personal lines. I think parametric might. I certainly think data-enabled, pure data-enabled models will come to the fore. I think you'll see some reinsurers and carriers going with certain distribution partners with a pure data enabled model for certain types of business. It could be just focused around distress, or it could be around captives. And I think the value add around captives, where coming back to the whole service enablement and the proposition that's utilizing the risk management expertise, I think that could be an area where we could improve the performance of distressed portfolios, as well as obviously playing into the larger corporates who have only gone down the captive model. And because their costs are rising, they may actually seek to spread that risk and share it on a bit a wider basis. So that would be my crystal ball at the moment. I'd like to be more radical, but I think that's actually radical enough as it is for what is a very traditional part of commercial lines.
You're right, and it's complex as well. So I often think that we probably are still scratching the surface in
Yes.
insurance. We probably have done less than 1% of the amazing things which we could do, from still using historical data, but that enriching that historical data with new data set to prevent, predict, and enable big commercial players and smaller ones, right? We are not even looking at all the different commercial type of assets which are existing out there. And so a lot of work needs to be done, and a lot of mind needs to be changed in the way we do things. You know, we are dealing with 338 years old market, which, right, with a lot of people who do things in a specific way.
Very true. Very true.
So we know we are going through, a little bit of a turbulent time. You have amazing customers already, but as a growing business, you may actually seek investment in the future. And I love also talking about the purpose of this podcast, which is about corporate venturing. Mm-hmm. And when you look at the future, Iain, how do you see investment? How do you see your growth coming not only from your partners, but potentially from the investors which are going to bet on you?
Well, to facilitate the growth, we're now into our fourth year, and we're profitable. We're growing. We were lucky enough to be generating. We had 4 initial angel investors, as such, seed investors, and we've been able to actually fund the earlier stage of the business, and in parallel start to, because of the subscription model, generate our own revenues from an early stage. So we've been able to sort of bootstrap it with the founding investors and ourselves funding it. But now we're reaching an inflection point where we need to really kickstart the growth. So geographic expansion into supporting basically our North American partners and our North American infrastructure. We've got Kurt Kramer, who's leading our North American venture. We've now got clients, as we said, global insurers who are taking us into Europe and the Far East, as well as North America. And so we will be seeking investment in 2023. We are researching who's interested, who has an appetite. I think our business model is attractive because subscription based, we're profitable. Yes, we need to invest in people, processes, infrastructure. We need to also, we've got both the hardware and the software components to the solution. So we need to sort of insure ourselves from any supply chain issues. So, we're pretty good at the moment. We've got 12 months worth of hardware supply, but we need to actually extend that. So that's where the investment will come in to help give us the cushion and the security to be able to buy sufficient stocks in advance. We've got certain components that are on 6+ month lead times. And so we've gone 12 months out, and we'll continue to sort of extend however far we need to go. But that investor could come from the industry or could come from outside. It's somebody basically who buys into the culture that we've already talked about, but also buys into the fact that insurance will change. We are going to be a catalyst for that change, along with our other ecosystem partners. And I think we've got a very exciting sort of 3 to 5 years ahead of us, and that's how long we see the journey, but actually how excited we are about being able to help drive change in the industry and deliver on that. And so we'll be seeking partners who can help us on that journey, who may bring their own network of opportunity, or it could be that actually that it's somebody who just sees an opportunity to get into a new market. But so I'm going into it, Philip and I are going to it eyes wide open, ready to embrace what the next 12, 18 months will hold from a funding perspective.
Yeah, and you need to give yourself some time. I often say to young ventures, think about your funding. It will probably take 12 months. Now, with the current market, high cost of capital, VCs are going to be a little bit more demanding. And so you're lucky because you are still early stage. So they want, well-baked, not too high valuation. So remember that. But actually, I've seen a lot of corporate VCs doing very well because they are prepared to wait longer. And maybe a top tip, look at insurance for sure as an investment platform, but commercial property, real estate investors will likely be as well a great place for you as well to consider.
I think you're right, because they see the opportunity of being able to make better decisions with data than they currently have at the moment. And they're in a market, and if you look at the traditional asset manager or facilities manager, they've had their margins eroded over the last few years, and this is data enables them to actually start to provide a better service, so they can improve the margin performance of the services they're providing into their clients as well. So I would very much agree.
Yeah. So what are the last few words you would like to tell our audience and listeners, Iain?
Oh, wow. That's a killer question at the end. That is, Sabine. I would say we are still at the very early stages of how data can be used, how you can create intelligent products from the data that we're capturing around buildings that feeds into the wider ecosystem. And I know Anthony and Jonathan would say exactly the same from the perspectives of their solutions, but I think it's an exciting journey. We're literally at the first part of where the journey could take us in terms of the possibilities to add value, not just in insurance, but into the wider world of, everybody uses ESG, but, let insurance never underestimate the governance part, the risk management that they can deliver around the governance part of the G in ESG is absolutely fundamental. Because if you don't have the processes and the governance, the E and the S just don't operate. You need to understand how people are utilizing all of your infrastructure, and you need to understand actually how you can make that deliver on a sustainable basis to deliver the environmental part. And I think that would be my parting shot. The data will drive the value. Beautiful words. So where can people find you? You can find us at gwtinsight.com. We've got a revamp to the website that's just gone live. You can follow from the website. You can talk to me directly. You've got all my contact details and the wider team, my colleagues Philip, John, and Pete, and the wider team. We're all on there. Everybody's got a picture. So you can find us there, and I think you'll hear a lot about us over the coming few weeks and months as we're raising our profile. Well, I can't wait. And also, I will add, you can find Iain on LinkedIn. And I checked as well, GWT Insight on LinkedIn. And he has a mobile number there. So I'm accessible, definitely accessible. Definitely accessible. Yes. Thank you, Iain, for giving me some of your time today. Pleasure, and thank you very much for the opportunity to talk to you, Sabine. It's been very enjoyable. Thank you. My pleasure. Thank you.